The Zacks rank, value, momentum, growth, and income all factor into Zacks rank buys.
Welcome to another edition of Zacks Rank Buy. I am Brian Bolin, and I am the aggressive growth stock strategist here at Zacks. And I got two more names for your radar screen. And I know you're all interested in the second name, but I'm going to go with the first one first. And that's Sapiens International. It's SPNS. Wow, my skills with the highlighter aren't that good. It's a Zacks Rank number one. That means it's a strong buy. And as most of these videos will have, it A for growth and a lower value score D. Here, I like that divergence because that tells me right away, as a growth-oriented investor, I'm on the right path. Because growth investors and value investors are inherently looking for different things. All right, so why is this stock a Zacks rank number one? Well, it's because earnings estimates. Earnings estimates are the big thing around Zacks here, and we can see that this company beats the number consistently. Boy, every time we have a beat here. So 12.5% on the average over the last 4 quarters, and then just slight ticks up for this quarter, next quarter, for this year, and next year. So or slowly moving higher is a good thing to see. Everyone likes to see earnings estimates ticking higher, nice and slowly, so as not to jump out of line and get the valuation people all scared. Speaking of valuation, let's take a look at it for this stock. 29 times forward earnings. That is a lot. Not gonna lie, that's a big number. But 12% annual growth rate's pretty good. 6 times book. I mean, in terms of software names and specialty groups, so this is like a stock that services the insurance industry. So I'm going to live with that. 4 times sales obviously tells you that each incremental sales dollar is worth something. Net margin moving up. We like to see margins moving higher along with that growth, and that's just going to end up to be more earnings, and we can see operating margin doing the same. All right, let's take a quick look at the chart here, and the problem here is that we missed some data from here to here. No volume from there to there on the stock price, but there were still estimates. So, estimates keep on moving up. That's what we like to see. Those lines, each colored line is a full year or different year of earnings estimates. And you can see the stock after a couple nice beats here, really starting to move up here in the 26 range. So I like this one. Keep this one on your radar screen. I don't think a lot of people are talking about this one. But a lot of people are talking about our next stock. And wait for it. You know it already. It's Tesla. I'm going to say the ticker is TSLA, and there is no Q. There is no Q on that. And they want. I know the people that don't like Tesla, and you're allowed to not like it. It's no big deal. But they would always put TSLAQ as if it's going to go bankrupt. That's funny. $645 per share now, up 11% as I'm filming this video. It's a Zacks rank number 3. And someone would say, Brian, why is this a Zacks rank number 3? They just beat and they're awesome. And they're awesome. The Zacks rank is focused on the movement of earnings estimates amongst all stocks. So estimates weren't moving higher for some strange reason. We'll go into that. And then we'll learn why it's a 3 instead of a 1. But I'm going to guess that pretty soon this rank number is going to move in this direction. Oh, what a great arrow. And it's going to look good. But we got an 8 for growth, as these aggressive growth videos have. And an F for value. Again, that's the divergence. I like to see the divergence. Let's go ahead and take a look at the estimates. And we'll go a little bit deeper into this. So Tesla misses and misses. And when they're misses, they're big misses. But when they beat, yeah, love them. Oh, that was a big one. And really, when you're looking at a miss, it's going to or looking at losing money, and then you post a big $1.86. That is wonderful. Last night's number was 214, and it was $1.62 over our number, $1.53 over the Wall Street consensus. I know that we don't have the Wall Street consensus because we don't have a full, we don't get all the numbers. Some places don't give them to us. So, but you see the average positive surprise buoyed here by this big number. So 2 quarters of profitability in a row, 2 more, and someone from the Wall Street Journal is going to stop commenting on the stock. So, boy, look at it. Look at this. These numbers. Oh, that's why you're a 3. Okay, that's going the wrong way. $1.33 moving all the way down to 55 cents. This is going the wrong way too. Oh, no good. But the quarterly numbers, I got to tell you, are not as important as the annual numbers, and the 60-day time window is what's important here. So 573 up to 636. We like that. 1236 up to 1407. But I think those numbers are going to get even higher, even higher, and we have to wait for all the analyst numbers to come in. So look for that. Then that will drive the Zacks rank higher. So it usually takes a day or two after an earnings event um, for these reports to come in, and then the system's got to update, and it's not an instantaneous thing. The Zacks rank is not an instantaneous algorithm update. It is a daily process, and it takes a little while. So give it some time. All right, valuation on the Tesla. It's stiff. Let's call a spade here. 91 times forward earnings is a lot, but we know those earnings are going to move higher, so that number will move lower. 15 times price to book is a lot. 4 times sales, a lot. So sales growth here, a little odd looking thing there for a, but sales are going to move higher, and margins. Ooh boy, I mean I don't like that, and I don't like that, but we do know what the story is going to be all about here, and it's going to be more deliveries of big cars, right? This Model Y that's coming up, and of course the truck, the Cybertruck. I'm buying it as soon as I can, as soon as it comes out. I've got a Model X. I love it. It's awesome. I mean, I'm not going to be David Dobrik, the YouTube personality here, trying to smash it or something. But I love the car driving itself. Um, on highways, trips to Cleveland back and forth, great with the Model X. Spent a little bit more time on the road than I used to in a gas car, but that's okay. Take a look at the chart here. Um, there's this big move up here, then kind of hang out, and then generational buying opportunity, but whatever. That's when the whole thing's going to go bankrupt. Until we're not, and then the 200 to 600 move. Brutal for those shorts. Ow, whoa. The pain is real, and it's continuing. It is continuing. Let's go to shortsqueeze.com. That's where I like to get my short data information. 18% of the shares are sold short, but if I get rid of my scribble here, you can see that has decreased by 5%. Their shorts are covering. Shorts are covering, and I remember that number being well north of 25%. So I'm not tracking the shorts daily. I've got a life outside of Tesla, um, but it's a wonderful thing. I will say that they're the head short in charge is Jim Chanos, and he blocked me on Twitter mostly because I think he was talking about like someone celebrating. I think he said the Bulls were celebrating, and this was back um, some time ago. Let's. I don't want to go into it too deep, but I mean I made a joke to him. It was just a joke when we talked about he said the shorts. I think the shorts were celebrating. Where were the shorts celebrating? I think here. I think this is where he was talking about it, like shorts celebrating. I told him no, or they're saying spiking the football. And I told him, you don't know anything about spiking the football. You're a Badger fan. Oh, that's terrible. A Badger fan. And my Buckeyes, last time we played you in the Big Ten championship at that time, the score was 59-0. So they couldn't spike the ball. So sorry about your Badgers, Jimmy. But hey, go Buckeyes. Go Tesla. I love it. I know the valuation's tough up here, but this thing's a machine, and it's going to be moving higher. It's going to move higher for a long time. So That's it for this week. Be sure to join us next time when we take a look at two more aggressive growth stocks for your aggressive growth radar screen.